I'm Jane. We're in Consensus Hong Kong. I'm here with Brandon from Real Finance. Brandon, would you mind introducing yourself and telling us a little bit why you're here today?
Yeah, absolutely. So I'm Brandon Kazakoff. I am the VP of Ecosystem Growth at Real Finance. Real Finance is an EVM-compatible, institutional-grade Layer 1 blockchain for real-world asset tokenization. So, one thing that I've noticed throughout this event is that the RWA thesis, the RWA narrative, has a very strong presence here. And, in my opinion, real world assets are one of, if not the best use case for blockchain technology. It just hasn't necessarily been where it's needed to be from an adoption standpoint nor a regulatory clarity standpoint in the years prior for real world asset tokenization to kind of hit this growth curve that it's starting to hit. Now I think finally we are at this point.
Yeah, we're at a really great adoption point for it. In terms of RWAs, what do you guys specialize? Are you interested in the finance sector or in the real estate or whatnot?
Absolutely. So I would say that we really are catered to the financial institutions. That would be one of our specialties. We have a bit of a unique differentiator in the way that our blockchain functions. As with any other proof of stake network, there are technical validators keeping the network secure and functioning, but these real world organizations and agencies, risk scoring agencies, as well as insurance companies that are insuring these assets against default, and then the tokenization companies, they're all acting as validators on the network as well. And what we're finding is this is kind of helping close that gap for a lot of these traditional financial institutions to feel comfortable bringing their assets on chain. I digress a little bit. The answer that I would have, though, is that being the back-end infrastructure, we are able to allow sort of any asset owner, any financial institution, and any company tokenize assets as long as it makes sense jurisdictionally and from a compliance standpoint. So we're the back-end rails, we're the blockchain that enables this.
Right.
Through the other partners that we work with, tokenization issuers like Starbucks, Bricken, for instance, they've got basically the standard token deployment that is going to allow these asset owners, the financial institutions that might want to bring their instruments on chain, or companies or whatever it may be, to do that. And then in the back end, we have partners from the custodial standpoint that help out as well. And then the further use cases, DeFi use cases, collateralization, yield bearing capabilities, all of these sorts of things. So the financial instruments from the institutions, absolutely. Tokenized, fractionalized real estate, definitely. A company deploying a securitized token offering rather than doing an initial public offering, for sure. But then there's all of these other fringe use cases that I would say have a lot of money flow that aren't necessarily talked about as frequently as some of these other ones, like private debt or accounts receivables, insurance settlement, like regular business cases that can all be brought on chain as well.
So you're working with a lot of traditional finance companies then, and what is your pitch to them to kind of say, hey, blockchain is safe and this is a good way to expand your business?
What I think we're finding is that the banks are realizing that hey, this isn't just something that should be a portion of how we operate. The banks are starting to understand that this is an absolute necessity, but they don't necessarily have the knowledge or the infrastructure to do it on their own. And that's where infrastructure partners like ourselves come in, right? To be able to handle the full life cycle of them doing tokenization for their instruments.
Yeah, absolutely. And when you started, you were saying that now is the time when you think adoption is going to happen. What are your, the trends for 2026? What do you think is really going to take off this year?
Yeah, I mean, RWAs in terms of the overall market sentiment, as we all know, isn't great right now.
Yeah.
Vitalik from Ethereum said something interesting the other day, and that is that he's worried about the crypto industry dying if there's not these real world use cases for blockchain technology, and if everything's continuing to just be hyper speculative tokens, that could be problematic. And RWAs are sort of solving that, right? In
Yep.
terms of there is use cases, it's not hyper speculative. There's real world revenue coming into this tokenized industry, right? It's not just companies that are looking for speculative performance of their token to be able to maintain success in their business, right?
Yeah. So what would be your response to Vitalik if you were here with us?
Yeah, I mean, I would say that, if you look at the RWA narrative and how that is really turning up in terms of volume and focus, that is one very clear real world use case,
of crypto.
real clear business
Yeah.
case, right? And I mean, like I say, I think we're just sort of at the infancy of this adoption curve for RWAs.
Right.
It's really tough to pinpoint the exact amount, but there's probably tens of billions of dollars of tokenized assets at this moment in time. In the next 5 to 10 years, it's projected that number will change to tens of trillions. So, significantly overshadowing the entire cryptocurrency market cap as of right now, and increasing by orders of magnitude, right? So this is growing, and it's growing at a fast rate.
Yeah, so for people new to the industry, how do you actually put something on chain? Can you explain a little bit how that process works?
Yeah, so like I say, we kind of handle the full life cycle of tokenization. With us being the back end rails, the blockchain, that is effectively where their token lives and where the governance for the token lives. But there are these tokenization issuers or partners that we work with that are helping out with their sort of standardized smart contract deployment that they've basically developed. They handle the front end user interfaces. In certain circumstances, they handle the marketplaces to give these assets exposure to like the retail users, the end users of these assets.
Right.
And they've developed their structured protocols for effectively different use cases depending on asset class or jurisdiction, but they are standardized to ensure that they're all maintaining basically structural rigidity in terms of the safety of these assets going on chain.
Right. So you have a whole team that handles that.
Partner projects
well.
that sort of work for the full life cycle management of asset tokenization.
So what do you think are the biggest misconceptions with RWAs?
I mean, I hear people talk a lot about that, fractionalized investment in real estate as a use case, and
Yeah.
honestly, in the years past, that was one of the most prominent ones. But what I would say is that we're looking at sort of banking 2.0. Some people have used the term Wall Street 2.0. The thing I'll say is that these banks or traditional financial institutions, they've proven that the business model of the way that money markets and these financial instruments work is a good business model. They make money. That being said, there are some limitations or frictions that could be improved upon, which is where I think tokenization really kind of fits in. Right? Once an asset goes on chain, these markets are tradable 24/7. It opens it up geographically to more investors or end users. So yeah, removing bureaucratic friction, allowing more people to get access. And this kind of helps me segue into a point of why I've been in the Web3 space, for as long as I have, and what my kind of overarching premise in this space has been.
Please tell me.
Yeah, so a little bit of previous context. I am more Web3 native in terms of, I co-founded a launchpad that, the purpose of that was to democratize access to financial opportunities for more people. Bringing, we were helping the organizations that are in the early stages of their funding, and in turn, providing early stage investment opportunities for end users to be able to get in on the ground floor of these projects before they go live on market. My thesis hasn't necessarily changed. Democratizing access to financial opportunity is still what kind of my focus is. But now it's just in a much different, more mature format, with RWAs being where they're at.
Yeah, and speaking of your background, you have this really cool background. How did you join Real Finance, and what excited you about the company in the first place?
Yeah, so I've got a long-standing relationship with the two co-founders, Ivo and Val. We worked together previously on one of their past projects, Credifi, which is a DeFi lending protocol. And in the years past, we had all basically discussed that point that I mentioned earlier in our discussion. discussion, which is that we've always felt that asset tokenization and RWAs is one of the best use cases for blockchain tech.
Yeah.
But it wasn't necessarily where it needed to be in the years past. And now that it's finally at that point, we've been able to get together and work towards building this type of solution for the institutions, for the end users, for the asset owners.
Yeah, and what sort of milestones do you have coming up? What are you most excited about this year?
Yeah, so our TGE is right around the corner. So our network's utility token is going to be fully live within weeks, and it'll be live on various centralized exchanges, and that's yet to be publicly announced.
So can you give us any alpha here?
Yeah, I mean, we're partnered with regulated banks that have committed to bringing assets on chain. So we already have proof of concept in terms of what we're doing. Functionally, our testnet is going to be around the corner, poised for Q2 of this year, and then mainnet will be soon to follow as well in Q3. And there's so much for us to build between here and then, right? Relationships with additional financial institutions, custodians, integrating DeFi protocols for collateralization and yield-bearing opportunities, and all of the other sort of counterparties that could potentially be integrating or benefiting from the network between here and mainnet.
Yeah, so what kind of partners are you most interested in getting, or who are the best people that should reach out to you and connect with you?
Yeah, absolutely. So, partnering with tokenization companies allows them to offer us as an additional option within the execution stack. So an asset owner that is potentially going towards them might look at, well, why this chain, or why this chain, and what are the differentiators?
Yeah.
And it may
So why real finance?
Yeah, and it may come right down back to that sort of closing the gap in terms of what some of these traditional institutions are looking for to be comfortable to bring stuff on chain, and that dual validator architecture would be our main difference, right? All of this traditional risk scoring data, the insurance companies, and then the tokenization issuers, that information being directly implemented into the token metadata is a huge pro for these people that are looking to bring assets on chain.
Yeah, that makes a lot of sense. And that's definitely a great selling point too, especially if people are afraid and have heard bad things about blockchain.
For sure, and beyond that, us being a purpose-built chain for RWAs, all of the counterparties that we work with fit our thesis, right? So some of the more general chains, while people are deploying assets on them, may not have the ease of use for RWAs compared to us, right? Because again, we have all of these counterparties that fit all of the pieces of the puzzle together, right? To make that full life cycle easier.
Yeah, no, thank you for explaining that. And just before we wrap up here, is there anything else that we missed or you think we should share with our audience?
No, honestly, I think this was rather all-encompassing. I mean, really exciting times, really exciting space, and like I said earlier, the market conditions aren't great, but this is an excellent example of how the space is maturing. Regulatory compliance is maturing. Crypto or Web3 backed projects are starting to build out proper business cases, and they're becoming more sustainable that way, instead of us going through these cycles of the hype cycles of, we had DeFi summer, and then we had all the meme coins this last cycle, and I think that while RWAs as a narrative might be a really strong narrative for this cycle, they're going to be this upcoming cycle. I think that they'll be a sustainable one.
Absolutely.
That aren't going to go anywhere.
And I think it's so important to keep building during these difficult times, because it's showcasing that you could survive no matter what. And I completely agree with you. Like, crypto needs to have this real world use case. So thank you so much for sharing more about what you're building. It was so great meeting you and chatting with you. So thank you, Brandon.
Thank you for the time.
Yeah.
Appreciate it.